What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Ellie, and it's pronounced Koo, right?
Yeah, Eli, cool.
Eli, cool. How you doing today?
Doing good, doing
All
awesome,
right,
doing
good,
powerful.
good. I got some great news for you, Eli. The great news is today we're being joined by my very favorite audience member. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate syndicators, buyers, sellers, stuff like that. And why would I do such a silly thing? Well, if you've ever heard of off-market, private, also known as 506B deals, you'll find out that you need to have a documented substantive relationship, or else the SEC will get ants in its pants and you'll be in trouble and you'll lose your business, and that's bad. So I interview all these people and I find out what's their level of sophistication, appetite for risk, what exactly are they looking to contribute to this deal. And the beautiful thing is you not only learn how my guest will fit into these deals, but you also learn how to communicate effectively on the subject of commercial real estate deals. But before we get too excited about that, Eli, do you want to say a thing or two about yourself before we talk about your business?
Sure. I'm Eli. I'm from Hawaii. Was in the military, and I love syndication. I love investing. I'm an entrepreneur by heart, by trade, and yeah, that's a little about me. A little fast. Father figure and a loving husband.
Beautiful. I love it. I love it. And that brings me to the five distinct motivations. You've actually kind of alluded to it a little bit, but before that, I got to say, but wait, check your eight. Eli, I don't know if you can see through the camera and down there. It's the audience is five, but there might be this hideous subscribe button, and maybe they should, because it's embarrassing. No, it's just a stupid joke. Anyway, let's go on to the five distinct motivations. Now, I've talked to all sorts of people in commercial real estate, and everybody has their own unique why, but at the same time, I find they fit pretty neatly into these five different motivations, these five different categories. And the reason why it's important to know this is because these deals take months. There's all sorts of risks involved, and I need to see why somebody's going to follow through with it. And so in every episode, I go through these five. The first one is preservation of purchasing power. What's that all about? Well, there are some people who have a portfolio of assets, and the way that they make ends meet is from the proceeds of ownership. So the only reason that somebody who's in that situation is going to make a new acquisition is either if inflation is rearing its ugly head and they have to make the new acquisition because the inflation is eating away at the purchasing power, or the other one is when they're buying at a steep discount, like when there's distress or an asset crash, something like that. But that's not where I'm at. I'm not there yet. What I'm up to is trading time directly for wealth. What's that all about? I got a background in tech. That means that's a high wage, high salary earner, at least for that part. And I started working for a guy in 2014, helping with all of his outbound marketing, email, and IT. And he was flipping 10 houses a month. And I found out, well, wait a second, I seem to be paying more in tax than anybody else. So how can I pivot to where I'm like my boss, where I'm getting rewarded in the form of deployed capital, aka equity? So that's what I'm up to. But that's a little too abstract for some people. Some people, they really want the simplicity of getting their schedule back. And maybe that means working fewer months per year. Maybe it means working fewer weeks per month, or maybe it means actually fast tracking your retirement. But regardless, if this is it, you're looking to dial it and scale back in the long term. But That's not everybody. Some people are just plain ambitious. They want to buy their entire hometown. They want to go for that generational wealth and make sure that their great grandchildren never have to hold a day job. So they're going to be hustling into their 90s, and that's fantastic on a GP team. Just like the last category, though, they're not inspired so much by ambition as much as they found a sector of society. Maybe it's the environment, maybe it's animals, who knows what it is, but they've decided that they want to make a really big difference, and there's a financial component to that. So that's why they're making their acquisitions. So of those 5 different categories, Eli, what combination of those would you say describes you best?
The last two, I think me and my wife actually talked about this one time. She asked me, I don't think you'll ever retire. I like to work. I love doing investments, but my end goal is to help people. Something bigger than me, that needs to be put out there, and it's helping families. If you ever looked in something very recently, look at in the Western part of America or Western America, our family formations are slowing down and being broken. So yeah, I'm really want to put everything and put my assets and push it forward and help people.
Yep, I love that. And as far as I'm concerned, there's no doubt that that's where things are going. You know, like coming from being like an apparent high wage earner, high salary earner, and then finding how few people you can actually help when you're in that situation, and finding out that, hey, with the way that asset values work, you know, it like real estate's always going to be expensive. It's always going to feel expensive unless you bought it, you know, 10 years ago, 20 years ago. But that brings me to the tolerance for risk assessment. Now, if you've ever been involved in one of these private syndications, one of these 506B off-market syndications, one of the questions that the securities attorneys insist everybody fills in, it has to do with the tolerance for risk. Now, these questionnaires that you have to fill in before you can get involved, they're very invasive. They got all sorts of financial questions that a lot of people aren't so comfortable answering. But when I saw the tolerance for risk assessment question, I felt like I couldn't really use the answer to prove that somebody is sophisticated enough. So I made my own question. It's a fill in the blanks question. There are many popular investment asset classes, but I think blank is too risky. What's too risky for you, Eli?
Well, it's a very wide variety. I don't have a real too risky thing, but what I would say would be too risky is the stock market. It's volatile. It's very people are controlling your money, not you controlling it, and I feel that's a huge risk when you're not have idea of what's going on. If you're trained and understand pattern recognitions, maybe not too risky. But yeah, I think the stock market is way too risky. But anything else, real estate, you have full control. So I like that.
I love it. I love it. And, you know, I feel the same way about stocks, mostly because, you know, these big companies, they have PR departments, and like a PR department's job is to spin things so that it's palatable to the investors and whatnot. And so if you're involved in a Main Street syndication of an apartment complex or something like that, you know, you don't have people whose job is to BS people 24/7. So I'm just eating it up just like a subscribe sandwich.
Yeah.
It's a very subtle hint that I'm trying to pay here. But the people in the audience, maybe you don't know, but in every episode, I go through the Dan Does Deals Commercial Core Competency Cube. It has 6 different sides, and it has the 6 different roles in a commercial deal. And you can get your very own copy for free from dandoesdeals.com. And like a complete dummy, I don't even ask for your contact information. That's the cardinal sin of marketing, okay? You should always ask for some sort of contact information in return for your freebie. But I want nothing to stand in the way from you. Go into the site, printing one of these out and practicing with your friends and family so that you can really communicate effectively on the subject of commercial real estate, and of course also know how my guest fits in. So let's get started. It just takes 2 minutes. A repositioner is an acquisitions person. They're looking at a bunch of different properties and doing a bunch of paperwork. What is that paperwork, you may ask? Anyway, they're underwriting the deal. They're doing the math. They're figuring out, first of all, is this property even actually making the amount of money that the seller / broker is telling you is? Because Yeah. But I call these guys repositioners because they're a very specific type of investor. What they're bringing to the table that's a bit special, there are a few things. The first one is they're figuring out how can they find more upside? How can they make the property make more money than it is right now? Now, one of the most unconventional parts or surprising parts of being a repositioner is you have to be involved in investor relations. In other words, you have to be talking to all sorts of different financiers. Financiers are people who only deal with paper and money. They're not on the GP team. They're not general partners. They do not have any kind of asset management roles or details or anything like that. So the passive investors would be an example of them. So the reason why a repositioner has to know a whole whack of financiers is because if you can secure a more advantageous loan, that goes straight to the profitability of the building. So it makes sense to know a bunch of people who are willing to loan some money. But frequently the repositioner will have to try to reduce expenses with more efficient operations. You got to stop those Benjamins from going down the toilet. But of course, there's more to operations than just unclogging toilets or collecting rent or mowing lawns. There's also a marketing piece that most people don't think of, and I bring it up because that's one of my fortes. But the marketing is for even if you have a building that's 100 units or more, you might be outsourcing to a property management company. But if they can't fill the units, then somebody with marketing chops has to hop in and get those units filled. So that's one thing I do. And then the other thing would be all the IT and web-based help that goes with my CRM background. But operations, because commercial real estate's an old industry, there's only going to be so much wiggle room that you can pull off with optimizing operations. So frequently the repositioner team will get contractors involved to do a value add. In other words, they'll do renovations, they'll upgrade the units. The idea being that the next resident will be more than happy to pay more in rent each month than the previous one because it's a nicer place. But you have to be very careful with your contractor team because you can keep on investing more CapEx and still not get any return on your investment. Like if you're gold plating your toilets, which is a really, really bad idea. So to make sure you're not gold plating your toilets, if you're like me, and I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or two, because I categorically will not be that person. I'd still be stuck at an airport in an hour or two. So those locals are absolutely vital to any repositioner. But when the repositioner has found a property that they really like and they assemble a team, they turn around to the financiers and they say, hey, I got this property in mind. It's amazing. It's 350 units. It's tens of millions of dollars. You don't have, I don't know, tens of millions of dollars you want to lend us, do you? Well, the financier is going to have another question, and a lot of guru and courses, these different programs, they really gloss over it, which is the financier is going to ask, who's your sponsor? Who's your KP? What's that all about? So hypothetical scenario, you're a physician or an engineer, an attorney, something like that, and you get this idea in your head. How about me and my pals, we pool our resources and we take over a commercial property? Well, the flaw in your little plan is going to be that to be eligible for a commercial loan, somebody in the fold has to already own a similar asset. Okay, so if you don't have anybody who already owns a 350 unit apartment complex, the bank isn't gonna lend you the money for the 350 unit apartment complex. So somebody in the fold has to already be involved. On top of that, you need a certain amount of liquidity. And then among the ownership team, you need a balance sheet of at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. So Eli, as far as you're concerned, I know that you'll be doing some asset management, I'm sure. I imagine there's some boots on the ground, local aspects. And then of course, investor relations is key for everybody in this industry, but I don't want to put words in your mouth. So where do you see yourself fitting in on your next deal?
On my next deal, it would be acquisitions. Right now, I'm gathering all the properties and all the repositionings in your cube. It'll be a repositioning on your dice. Because as far as for what I do is I get a deal flow. They call it deal flows, properties that they want brokers from my markets, and then they sell it to me. And then once they get it together, I crunch the numbers, I underwrite it. I look for value add. I look for anything that can spike equity multiples. That's another thing that's very common in the commercial real estate world, and just bring in investors that wants to be on the part of the syndication. So
I love it. I love it. So then the next question has to do with buy box then. And when investors or syndicators are talking about deals, they're saying what you're looking for, what's your ideal property. We're really asking about three things. First one's geography. Where is it? Which state, which county, possibly even which neighborhood is going to be really, really important. Okay, so that's the geography. Second one's going to be size. Now, most of my guests on this show, they're in multifamily, which is apartment complex investing. Now, when you talk about apartment complexes, the way that you define size is by the unit count. And the reason why that's important is because you're going to have one type of group that'll take over these 5 or 10 unit apartment complexes, and you'll have completely different groups for 100, 150, 350 unit apartment complexes. So that size definitely matters. But the third one's called class. And unfortunately, this is one of my pet peeves. I don't like it when people use one term for two completely different things. And so when it comes to class, I separate it into condition and area. So when I'm talking about condition, how old is the building? How beat up is the building? Is it more or less up to date? And then of course, it's really about desirability. So it's like, does it have a bunch of amenities and luxuries that people will be excited to have it in their building? Or is it really like no frills sort of thing? That's the condition. But when you're talking about area, you're talking about things like, what are the school districts like where the property is located? How much foot traffic and car traffic goes by that property in a given day? And then of course, crime rate, which is making sure that you don't have an outrageous crime problem where the property is located. But both of those two meanings of class are ranked the same way as in grade school, where you got A plus at the top and then A minus and B plus and so on. So Eli, as far as you're concerned, and it doesn't have to be just multifamily, like if you're in self-storage or something where you use, you don't use, you still use unit count on that as well, but like industrial, it's like square footage. But what's easier for you guys to say yes to?
For us, what we're looking for is, I guess you would say, we are in the markets of South Texas, Alabama, Georgia, the Carolinas, and Arkansas. We are also on the highway of I-25 in Tennessee. That's where we look, and I have brokers in all those areas that I talk to. The size, we don't like taking anything under 50. Because we're using a syndication model due to the factor that we want to have a lot of pool in there, a lot of cap in there. And then also, we like to take C properties in a B area and bring them up to B. So we do a huge value add on those properties.
Mm-hmm.
And also known, we can also call it in the terminology of repositioning,
Right.
because that's what we do. That's how we look for.
Mm-hmm.
And then we entice investors with that huge value add on the equity multiple on a short-term hold.
Mm-hmm, mm-hmm. I love it. I love it. Great. So then the next question has to do with people. And the best part about commercial real estate is that because it's multifaceted and nobody's going to be all 6 sides of the die for any meaningful amount of time, people are really eager to make referrals, introduce you to people. But at the same time, because we have our own unique skill sets, we're going to be better suited to help some people more than others. So with my marketing background and all the technology for talking to 100,000 people or more at a time, the sponsors and KPs are the people who usually have the foundations in place where a guy like me can make a disproportionate difference. So I'm always eager to talk to them. And then of course, locals are also going to be vital because again, I'm from the internet. But Eli, as far as you're concerned, who are you looking for? Make sure if you are raising, don't mention any 506B deals, but you can mention that people who want to invest. But who are you best to speak to?
I am looking for locals in those markets, boots on the grounds in those markets for asset managing. I'm always looking for a sponsor in KP. That as a syndicator, those are the guys that's going to give you the most experience and level of education due to the factors they have done multiple deals already. So yeah, I'm looking for both actually, local and KP and sponsors.
Excellent. I love it. I love it. And then as far as how to reach out, me, I'm fortunate to have a distinct last name So on LinkedIn, it's really easy to find me. That's where I spend most of my social media time. But if you scan this QR code, it goes to the FAQs page of 506BME, which is the platform where I offer the IT service of documenting your substantive relations with your investors, so that once you get to a certain level of assets under management, the SEC audits people, and what they're going to make sure that your 506B exemption is okay is they need to make sure that you had those documented relations before you started telling them about your deal. So 506B is the platform I offer to help people with that. But Eli, Platinum Capital, where are the best ways to reach out? Is it social media, email, phone?
Oh, there. I'm on all. I'm on Instagram, Facebook, LinkedIn. The end goal overall is I want to influence people. So I will eventually have more than one platform, but those seem to be where a lot of syndicators sit at, is in those three platforms.
Yep, I love it. I love it. And then the last thing, then, it's actually not for you. It's for you in the audience. It's my public service announcement. If you've been watching this episode and you've been experiencing like searing pains, like in your eyeballs and like migraine, it's probably because of the hideous subscribe button.
Yeah, you
down
better
there.
subscribe.
Yeah,
You better
and
subscribe.
it's free to hit it. It doesn't cost you anything. And if enough people click on it, then YouTube will start to pay for these videos
Oh
instead
yeah.
of me. And I think that would be amazing. But as far as the consequences go, it means my videos might show up on your list of suggestions. But frankly, you can go ahead and ignore those suggestions, because I just appreciate the fact that you spent this time with me, just
Yeah.
like Eli.
I appreciate that too. Hey, subscribe, follow, and hit your notification so anytime he puts it on there, you get it. When you get it, then we all can be together. Maybe one day we all syndicate.
Sounds good to me. All right, thanks a lot.
All right.
Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.